Essential knowledge: the war between the fundamentalists and the technicians. To say it's a war is overstating things, perhaps. But we could say it's a war of words. The Warren Buffett clones of this world versus the George Soros clones of this world. Two camps, two approaches to the market. To understand what you're about to learn, you will need to have a context. This means a rapid review of the cornerstones of market hypotheses, theories, and studies that have occurred over the last 200 years. Luckily, this falls into two categories: technical analysis and fundamental analysis. What does this really mean, fundamental analysis and technical analysis? Imagine, if you will, the job of a meteorologist. One of the core roles of the meteorologist is to predict the weather. The approach to weather prediction is in many ways like traders and investors approach the market. The fundamental approach to weather forecasting means you need to understand the fundamentals: why rain clouds form, what happens when cold air meets warmer air, how thunder and lightning occurs, how hail or snow forms, why winds move in particular directions in general, what types of rain clouds produce what types of weather. However, understanding all of the fundamentals does not enable you to predict the weather on a particular day for a particular region. This is similar to the market. Understanding how the Federal Reserve works does not enable you to predict the stock price of ABC Incorporated, nor does knowing that ABC has increased its sales guarantee any way a stock price might increase. To predict the weathermen also use a technical approach. They measure the direction of the wind, the temperature of the air, the humidity, levels of rainfall, and cloud density. Using this information, the weather forecaster can combine what is actually happening with their understanding of the fundamentals of weather. Using technical analysis on the stock market is just the same. If you know what the market trend is, for example, if it's up, that could be the wind direction, and you see the price movement of a stock is accelerating, wind speed, and you know how much power the rally is carrying using volume and stock price, and you can see where the next resistance area will be, then you can assess the probability of the stock price increase. You can then use this probability to assess your risk reward of being correct, forecast the weather, and then place the trade, announce the weather forecast on TV. Understanding the conditions that breed a healthy stock market and a healthy company is fundamental and very important. However, if you buy any stock at the wrong time, when supply and demand is not in your favor, you stand a strong chance of losing money. This is why the technical approach is so important. So to recap, fundamental analysis studies the why. Technical analysis studies the what. Fundamental analysis studies the cause, and technical analysis studies the effect. In fundamental analysis, the focus is on value, on economic data, and fundamental measures. However, technical analysis focuses on market action, on price, and on the trends. So technical analysis forms a hypothesis based on what actually happens in the marketplace. It only forms an opinion about the market based on the market or what the stocks tell them. Supply and demand is key. However, in fundamental analysis, the hypotheses are based on fundamental data as to what has value, and therefore forecasts using news and economics, or simply the value of a business.